What's the best investing strategy for long-term growth? Keep watching because I'll answer all these questions and more. Let's proceed. First, let's talk about the platform I use. There are so many options out there: Robinhood, Webull, Fidelity, Vanguard. But I personally prefer to use one offers free trades per month, meaning you do not have to pay any fees whenever you buy or sell. Picking the right platform is crucial because hidden fees and poor user experience can take your profits over time. Let me know in the comments which platform you prefer and why. Next, let's talk about the specific S&P 500 fund I invested in. There are three main options. VOO, Vanguard S&P 500 ETF, Loix 0.03%. SPI S&P 5TF, more liquid but higher fees, and 0.9%. iShares Core S&P 500 ETF, similar to VOO with a low expense ratio. I personally went with VOO because of its long-term performance, low fees, and strong track record. But all three are great options, and it really comes down to personal preference. Now, let's break down my one-year returns from investing in the S&P 500. I started with my first investment of $300, and I continued adding funds every month. My investment amounts varied, with some months seeing as little as $104 and others over $350. Fast forward to today, my total investment is $278, with an average price per share of $37.40.18. As of today, my unrealized profit is 15.78% and my overall return on investment ROI is 8%. But here's where I made a mistake. I did not set up automatic recurring investments, dollar cost averaging, or DCA. Instead, I bought more when prices dipped and less when prices went up, which made my investment journey more emotional than strategic. Looking back, if I had consistently invested the same amount every month, I would have averaged a lower cost per share and earned better returns. Lesson learned. My strategy is sticking to my new plan. Before I go ahead into my new strategy, I want to share a valuable resource with you. I've put together a free guide on asset allocation for different life stages: 20s, 30s, 40s, 50s. If you're wondering how to balance your investments at different points in life, this guide will be super helpful. You can download it now using the link in the description below. Make sure to grab your copy. Here's my new dollar cost averaging DCA strategy. Invest $400 per month into VOO, no matter what the market is doing. Focus on long-term growth instead of short-term fluctuations. Diversify by considering investments in the Nasdaq 100 QQ or Total Stock Market Index, VTI. Assuming an 8% average annual return, this strategy could grow my portfolio to $730,000 by the time I turn 50. Not bad for a hands-off investing approach. While the S&P 500 is a great investment, it's not my only focus. I'm also into bonds, real estate, dividend stocks, and potentially crypto, depending on how the market evolves. If you want a deeper information into my full investment portfolio, let me know in the comments, and I'll make a separate video on it. The key takeaway: stay consistent, automate your investing, and focus on long-term growth. If you found this video helpful, share, hit that like button, subscribe for more investing content, and drop a comment below. What's your biggest investing lesson? Let's chat in the comments. See you in the next video.